Hi, everyone. I'm Jeff Prasen for the Interactive Brokers Podcast. It's my pleasure. Welcome back, Scott Bauer, Prosper Trading. Hey, Scott, how are you?
I'm good, Jeff. How are you?
I'm great. I'm great. And this Wednesday morning, coming live from the floor, we have another one of our 5 minute market podcasts. I'm excited to have you on. Scott, it's another week, another wild ride in the market. We hit the 7 day low on April 30th, rallied at the end of the week, and then held steady Monday. We opened lower yesterday, and this morning we're looking up again. Is the market getting used to, for lack of a better description, the shock and awe of tariff headlines?
There's no question it is. And that is no more relevant than watching and looking how the VIX is trading. If we would have this news flow that we're having right now, this was 3 weeks ago, 5 weeks ago, we probably would have seen the VIX back in the mid to upper 30s, maybe even higher. And now we're seeing it down in the low to mid 20s, which still historically is elevated. But yes, what that tells you is, and it's human nature. That's one of those psychological things about trading, Jeff, that is once more and more of the same situation happens, we become numb to it, and the market does as well. And that kind of concerns me a little bit here.
I was just going to ask you about volatility, and especially not only the past week, because like you said, a month ago, this would have been 45, 50. Are we headed back to 14 and 12 the next 5 days, or?
Yeah, I don't see the VIX going lower than 20 anytime soon. And I'm using that more or less as an arbitrary number. But there are just still so many geopolitical tariff headlines, macroeconomic issues that are out there that support the market moving, the S&P's moving 1.5 to 2% a day, which a VIX, that baseline, a VIX of 16 is really the equivalent of about a 1% move in the S&P's daily. So if we use that as a baseline, 32 would be a 2%. We're sitting right in the middle of that right now. And that's the trade that's going on right now. And I just don't see that really slowing down, easing just because of the constant headlines.
I think switch the gears a little bit because we are at the tail end of earnings season, and historically, the earnings seasons brings movements for several reasons, especially fundamental reasons. But from what you've heard and what you've seen, have companies come to grips with this new normal on tariff uncertainty? Or are they still wavering and not sure what's going on? Because they have to make important decisions as well based on
Absolutely.
what.
I think it's a combination. If you've read through many of the reports, yes, there's a lot of concern. Some actually have raised guidance. Some have said we don't know what the impact is going to be. And some, like an Apple or even Ford, have come out and said, okay, this is the number it's going to be. But again, I think the market, especially the retail sector, has become accustomed to that now. So I do think that moving forward, the cloud, the shadow that's over some of this guidance, I don't think that's going away. We've just become used to it. But honestly, Jeff, when I look at earnings as a whole right now, I think they were far superior to what the lowered expectations were, much better than what many economists, analysts would have thought they would have been. And if it weren't for the tariff overhang, I think the market could really take a nice leg higher.
Yeah, it's crazy to think, right? With everything that's going on, we could just be right back into a rally at some point again with all the uncertainty. Scott, this has been great. Thanks again for coming by. For our listeners, you can find more from Scott on our website under Education tab from podcasts and webinars. Also, go to his site, prospertrading.com, for Prosper Trading Academy. Scott, thanks so much, and looking forward to having you on the show again.
Look forward to it. Thanks so much, Jeff.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.